So, if you're looking to purchase a home, before we get into all of the details about different loan programs and etc., let's first talk a little bit about applying, what that's like, when you should, and etc. I know I talk to a lot of people who are very hesitant about applying for a mortgage, and I can completely understand that. In fact, I'd much rather have a conversation with you about your credit and your credit challenges before we ever pull it in the first place. That way, we have an idea of what we may or may not be able to qualify you for. And if we think we can't get you approved right now, then we can start to tailor a plan for how we can get you there. So most likely you're going to end up filling out my online application. It'll take you about 10 to 15 minutes. All of your information is encrypted and secure. And then as soon as you're done, it transmits the information directly to me. Then I can start working on your application. So the first thing we do, we import it into our loan system and we start reading through your basics. This is where it's important to be very accurate about your income and your employment history. In general, every time you apply for a mortgage, you're going to need somewhere around 1 to 2 years of employment history at a minimum. So that doesn't mean that if you've only been on your current job for 30 days that you can't get a mortgage. It just means that for most people, you're going to need some type of a history that amounts to at least 1 year, not necessarily in the same industry, but just 1 year of total employment. The second thing I'm going to look for is your income. And I'm going to look for whether or not it's stable, if it continues every single month, or if it's more on an hourly schedule where some weeks you work 35 hours and some weeks you work 40 hours, some weeks you work 45 hours, etc. So with the overtime, I can only use it as long as it's consistent. So I've got to show a history of that and project it forward. Also, if your hours vary greatly from week to week, that still doesn't mean that you can't get a mortgage. It's fine, but I have to make sure that I establish a rhythm to it. So I have to be able to predict where your hours are and where they're going, and I can only give you credit for whatever your average is out of that amount of time. I'm also going to look at things like whether or not any of your income is bonus. So whether or not that's going to continue year over year, or maybe it's salary, so it's very stable and we know we can use it with very little documentation, or if it comes from a fixed income source like Social Security Social Security income or a pension or an annuity from a retirement account. All of those things are completely acceptable forms of income for a mortgage application. It's just that all of them come with different documentation requirements. Now, out of that income conversation, next we'll start to look at what is your debt to income ratio. This is one of the most important factors in qualifying you for a mortgage. It varies for the different loan programs you're looking for. For instance, just as a roundabout, with conventional loans, you generally can't go much above 50%, and in most cases, 45% of whatever your gross monthly income is. So we would take your gross monthly income, multiply that by 45%. All of your debts, including the new mortgage that you're applying for, need to fit under that 45%. If you need to expand that 45%, that's where loan programs like FHA come into play. FHA will generally allow you to go up to 55%. And it may not seem like much, but that 10% actually makes a huge difference. So sometimes you may end up having really good credit, like a 720 or a 780 credit score, but still needing FHA. Well, in those cases, what that is, well, you probably have an extended debt to income ratio, which is a lot of Americans right now. So that's not all that abnormal for somebody to have very solid credit but still be leaning on the FHA program. Now, the next bucket that we're going to go into is looking at your assets. What are your assets? How much is liquid? How much is retirement savings? How much you have access to in a worst case scenario? So, in a worst case, if you can't get approved for a zero down option like a rural development loan or a down payment assistance loan with FHA, or a VA loan if you're eligible. If you can't use one of those and you have to have a down payment in order to get approved, a retirement account might give you the opportunity to borrow from that temporarily while you secure your asset. Your assets will be one of the most important things that we use in figuring out what loan program is going to work best for you. Not only how much do you have access to, but how much are you comfortable parting with? Because it's not just about what you can make work, but what can you make work for you? Now, generally, the last thing that we start to look at is what kind of home you're looking to buy so that we have an idea of what your goals are. Because it's not just about what you can get qualified for, but what do you want and how do we make those two things meet? So, hopefully, that gives you an idea of what it's like to actually apply. And if you want to get that going right now, like I said, tap the apply now button in my menu and you're off and rolling. Or call and text me anytime you're ready. It's 810 919 8138. Thanks.